All right, we're gonna see if we could analyze and look for some points of interest to see where we could get into some great trades and end next week with some great profits. All right, so first thing first, I'm on the daily time frame. As you can see here, if I zoom in a bit, I can clearly see price breaking above this high here, which at this point, because it broke that high and then it came down and took out this low is the low that put in this high right here. Right, so let's mark this low right here. So this is where market structure had shifted. All right, and the reason why it shifted here is because this low took out this previous high right here with the close of the body, not the wick, but the body closed above this high right here. So this makes this low a very strong low, because this gave energy pushing price above this previous high right here. So because price came back down and broke this low from this high, changing the structure of the market, this is now going to be our liquidity. This is where liquidity got swept, because remember, these are days. So from May 4th, price was moving down on gold. That's more than a month's worth right here. All right, so that was liquidity. I don't know how much they took from here, but it's pretty clear that they took a lot of orders from here, plus taking out a lot of buyers. All right, so yeah, so let's see. So first thing first, now I can look for my points of interest on the daily. So the next thing I can identify is a fair value gap and a order block right here. All right, next thing I see is liquidity resting above right here, relative equal highs. That is going to be my daily liquidity right here. But if we want to continue for sales, I would go for this low right here as my target for that liquidity for the sell side. All right, that would be my sell side liquidity. All right, plus we have a fair value gap here, plus just a fair value gap, plus a OB. All right, so after I've noticed that it's bearish on the daily time frame, I'm gonna now go to the 4-hour time frame. All right, we're gonna get some work done here. Want to see where stuff are correlating with each time frame, just to make sure that we have a somewhat accurate area, somewhat accurate like point of interest, an area where we could look to take the trade once price gets there. All right, so what I can see here is that I'm gonna start getting rid of stuff that way I could, like, start analyzing on a lower time frame, but I still want to make sure that it was at the same area. Like for example, a daily FVG was here, so now I'm at a 4-hour FVG, which this got mitigated. All right, so I might not look into this. I might just look more into the order block. And as you can see, so the word I want to use is I'm refining all this, right? Because if we're going to trade from the daily time frame, trust me, it's going to take a very long while. Because if I go back to the daily right now, you're going to notice that from price broke structure here, remember we wanted to return to either the order block or the fair value gap. Once price broke structure here, this was May 18. I said before, it's currently today's Saturday, so it's currently June 24th. So that's over a month, right? It still didn't get back there. So we're not gonna trade from the daily, but at least the daily can give us ideas, like biases, to know that okay, every trade that we're gonna take each day, if we're gonna do intraday trading or even scalping, or even swinging, but before the swinging, let's say we want to trade each day, right? So what this is going to indicate is that we're just going to look for bearish opportunities. So every time we get a bearish setup, this is just giving us extra confidence to go with that, right? So if we're gonna swing though, like obviously I said before, we wouldn't swing from the daily because it's gonna take a while. You do probably the 4 hour or the 1 hour, which we're gonna get to the 1 hour very soon, right? But what I'm trying to say is like, all right, for example, here on the 4 hour time frame right here, you would, like, I'm just trying to show you guys an example. So like, see the daily is all the way up here, but the 4 hour is here, right? So you would start looking for points of interest on a lower time frame. That way you could like swing from here to here, or to this low right here, this liquidity low right here, right? Hopefully I'm making sense to some of anybody that's new and watching this. All right, so I said before, that was just an example. So let's get back to analyzing and see what we could understand what might happen next week. All right, or even in the upcoming weeks. It doesn't have to happen next week because you already know it could consolidate some more. But anyway, so I said before, now I identified a point of interest here. So I have a OB, 4 hour OB right here. I got my fair value gap, but I'm gonna get rid of this because it already got mitigated and price sold off, so we're not gonna use that. But we do have an unmitigated order block here. And all right, so looking at this, there's no, in my opinion, there's no reason for price to go above this 4 hour order block if price should ever return here anytime soon. And that's because if you look here, everything here has already been mitigated. All right, except for this order block. Even the fair value gap below it is mitigated. All right, but this order block isn't. All right, so the next thing I want to identify is my buy side and sell side liquidity. I just want to make sure that everything correlates and everything is going well. So right now on the 4 hour time frame, I remember we already identify a sell side liquidity here on the daily, but on the 4 hour we're having one being set up right here with relative, come on, where is it, with relative equal lows. All right, so I'm just gonna annotate here for H. That's for the 4 hour. Let me just do this one as well, and this is the daily. All right, so these are my 4 hour sell side and daily sell side, but the issue with this one is going to be this order block right here. All right, but looking at this now, there's a ton of gaps below, so there's a ton of areas for price to go to. So for me, this low here, this order block, I wouldn't use this. I'm not saying you can't use it for like a short-term trade, for sure, but I would be careful. I would wait for more confirmation for here. All right, because we have a ton of reasons for price to go lower, then continue upwards when it takes these sell side liquidities. Hopefully this is making sense again, I said before. All right, so I see some liquidity here which already got taken over there. So yeah, so this order block, I won't look into that, but you can mark this up on your chart, and I said before, you could wait for more confirmation once price gets there. All right, so the next thing I want to identify now is, wait a minute, I see some more liquidity here. So now all I'm noticing is like there's a ton of liquidity being built up on the upside here. So there's a ton of buy side at this point. But the difference with this is, just in case, what I need to identify now, all right, let me retrace. So as you can see here, I have an order block right here, right? So that's only if price sweeps buy side. I have this order block to continue sales from, correct? So my thing is this: if I have a point of interest here, I need to have one for sell side. If sell side should ever get sweep next week, I should have a point of interest where I know that, okay, once price gets here, I need to start looking for buying opportunities, all right, because it already started taking out sellers out of the market. All right, or should I say it's introducing sellers, that way it can take them out of the market. Because remember, that's what sell side and buy side liquidity stands for. All right, because you want to see, for example, you want to see price going down. Guess what's going to happen? Sellers are going to be introduced into the market because they're going to notice that price is going down. They're going to say, okay, price is now selling. They probably get that little retracement that they're looking for, and then they're going to want to continue the sales, right? Meanwhile, their stop losses is like probably right here or just a little bit above here, right? So price are introducing sellers into the market, creating inducement, right? And then it might just come to the point of interest right here, and then, you know, start trickling back a bit up, start breaking structure again, right? Creating that market structure shift there. Meanwhile, taking out sellers in the in the process, right? And then it just continues with buys right there, just like that. So introduce sellers into the market. The whole point of buy side and sell side is to introduce them into the market, just to come back and take them out as liquidity. All right, so while everybody is selling here, we will be looking for buying opportunities. While everybody is buying here, when price starts taking out these buy sides, we'll be looking for selling opportunities, right? Sorry about that. All right, so yeah, I said before, that's just one point of interest. We really have a lot coming down here, right? We really do have a lot, but we want to start with this first. All right, this first one right there. Let's see if we could get any order block. I'm not. All right, yeah, I'm not interested in none of those at the moment, but I am interested in all these fair value gaps here. So these two are definitely going to be my buying areas where I would look out for buys eventually. All right, so remember, if we could get price breaking below these lows, probably like this, you know, going down into our point of interest, coming right back up, breaking structure. By the way, when we're looking for that break of structure, we're not going to do it on the 4 hour. All right, that's going to be too long. So let me just go into our actual like time frames that we're going to be looking to trade. All right, so let's go to the 1 hour. Let's see what's going on here, because sometimes you could really get some trades just to continue into taking these sell side liquidity on those higher time frames. All right, I'm not gonna do the 1 hour because I believe the 30 minutes is way better. And immediately after looking at the 30 minute at recent times, all right, the first thing I've noticed is this order block right here on the 30 minute time frame for us to continue with selling opportunities. All right, plus the greatest thing is to identify liquidity that's resting below or above the order block, depending on the direction you're looking to go. Right here we have some very nice equal highs, very nice. All right, and we have some little liquidity being built up below right here. Remember, this is on a 30-minute time frame. All right, so these are trades that we could look to get into like probably Monday, Tuesday, you know, right before midweek comes, just to continue. That way we could go ahead and take out these 4 hour and daily lows, the liquidity, the sell side liquidity, before we could really start getting into buys. Because at this point, I'm not gonna say this has to work, because we still have this above, but the price is closer to sell side liquidity. So I'm looking for that magnetic pull for price to pull price down into these areas, start taking liquidities, introducing more sellers, introducing more liquidity. All right, that's what I'm looking for. But I said before, in the upcoming, probably the next 2 days after market opens for me Sunday 5 p.m. so that's pretty much tomorrow. So starting then, I'll be looking for price to start trickling up, taking out buy side, and then go into our order block right here probably by Tuesday. I'm not sure if some news is coming up. I'm pretty sure there's gonna be news, isn't there always, right? I haven't checked yet, but if there is, that could be the catalyst to push us further down and help us to start taking out these sell side liquidities. All right, 4 hour or daily, but we also can just continue. This could also be a thing as well. We could go up into this gap or into this gap, for example, or just a little bit. Let's just go for this one. We could do this. We could start taking out these sell side liquidity and, you know, continue, probably go something like this, taking out the 4-hour liquidity, then go up, you know. And at this point, you know, buy side, so it's going to start introducing buyers. People going to think it's buying, and then we get that reversal right here, or should I say continuation, because currently gold is bearish for the past month. All right, so that's where we could take it here and then continue to take out, oops, come on, continue to take out sell side liquidity. Or it could, I said before, it could, oops, am I selecting this? All right, so it could go into the gap here, take it out, break all the way above. Now it start introducing a ton of buyers. All right, a ton of buyers, like building up some serious liquidity at this point, going all the way up to our original 4-hour OB. And then how do I continue? And then from here, that's when you start nose diving. All right, I'll start taking out all the daily sell side liquidity, and then goes into our buying opportunities, or should I say demand zones, right here. All right, and then let me show you guys what you can do if price should come up here. So you're not gonna take the trade after 30 minutes. You're just gonna set an alert, and once it gets here, that's when you want to go to like your 5 minute. Right now we're just basically doing a top-down analysis. Right now we're refining our trade, that way we can maximize our profits. All right, instead of risking 100 pips to make 200 pips, because, you know, higher time frame, big moves, right? Instead of doing that, now you could risk 15 pips to make 200 pips. All right, that's where everything's gonna get crazy. So it's like, why risk? Let's see, we're gonna put it, because we need that space above, right? We need that coverage, right? So right here it would have just been 36 pips, so we just need that coverage. So we're just gonna add a whole 10, so like 46, right? And then I said before, we're gonna start targeting the 4-hour liquidity first. So that's a 9-to-1 RR, just like that. All right, you're risking 45 pips to make 431, right? But this is just you doing this. All right, so for us to refine this trade, we would want to see price come into this 30-minute OB. I said before, any one of the OBs, it could be the 30-minute, it could be the 4-hour, any one of the order blocks. All right, but what you want to see is price coming in, or even just tapping, doesn't really matter, because you want to identify this one I'm going to show you right now. So you know what, let me start this over. Let me do it like this. So you want to see price doing something like this, breaking structures, going up, giving you those higher highs, higher lows, going right into it, right? And then this low that broke this previous high, which put in this new high, you want to see this high come back and taking out this low right here, this bad boy right here. And that's when you want to start looking for, now you're going to start looking for your 5-minute points of interest. All right, now you start looking for your 5-minute points of interest, right? And that's when you want to continue the trade. So at this point, instead of risking 46 pips, now you could just risk a whole, like, let's see, we gotta put it just a little bit above, you know. So now you could just risk like 20 pips, right? And your whole risk to reward just becomes, let's see, so it was 9-to-1, now it's a whole 20-to-1 RR. So that's how you refine your trade. I know you're risking a way less to make way more. All right, and then this could occur. This doesn't have to look just like this. It could even occur somewhere like this, where it goes even deeper, and you get your trade right here, which this is the better one when it goes deep inside that order block. All right, and then you could just start taking profits along the way, just like that. Cool. And then next thing you could do, if you're not scared of the 1 minute, honestly I mostly trade the 1 minute time frame, but if you're not scared of the 1 minute, then you could even refine this even more. All right, so would be the 5 minute structure, right? And then you want to go to the 1 minute time frame from this. Let's say the point of interest is here, right, on the 5 minute time frame. All right, you want to go to the 1 minute time frame, and you want to look for the same exact pattern into this 1 minute time frame area. That's when your trade is going to start looking something like this, because now you're getting into somewhere here. It doesn't really matter, just remember that you're looking for this structure now on the 1 minute time frame. So now your trade goes from 20 pip risk to probably 15 or 10, or it might just stay the same. All right, and then now your RR would be like 41 to 1 RR, just like that. But I said before, you're gonna be taking profits along the way, because you never know, price doesn't have to come back here. It could start making new liquidity areas, it could start making new order blocks, new fair value gaps, where it's going to take price from continue higher and go into our 4-hour area here. So you just got to keep in mind all those areas, right? So let's see if I could give you guys a quick recap real quick. But that's the top down analysis right there. So looking on everything from the daily all the way back to the 4-hour, we're seriously looking bearish. So we want to find as much bearish opportunities as we can. All right, that doesn't mean you can't take buys along the way, but you want to find as much bearish opportunities as you can to maximize the trend. All right, but you just got to be patient and just look out for all these areas. All right, so make sure to mark these up on your charts from the daily to the 4-hour, the 30-minute right here. All right, and then remember, once it gets there, you can start refining your trade. Go to the 5 minute, go to the 1 minute, look for those confirmations. Remember that pattern I literally just showed you, look for those, that exact pattern, look for the confirmation. All right, and remember, price could easily just continues and start taking out these sell side, come all the way down here without even touching these areas, right? That way it could just continue for straight up buys. To be honest, at that point I would just get rid of all these and just look at all of this as just liquidity going all the way up, or we could just get a little nice retracement there and then it continues up like that. It all depends on what he wants to create in that meantime. All right, I don't know if you guys can hear the noise in the background, but that's rain pouring. It's pouring over here in New York. Trust me, it's crazy. All right, so you have to be careful and just look out for that as well. But to be honest, I'm mostly looking for price to go up and then taking all these, some, even if it's just this buy side liquidity, and then continue down. But I'm definitely looking for price to take some sort of buy side liquidity before coming back down. All right, but that's what my bias is strongly suggesting. So I'm gonna be looking for selling opportunities into next week, stuff like that. But anything can change, and I said before, if it does change and it starts taking out sell side, so this is where everything determines everything. You're not gonna really try to predict anything, you're just trying to react to all these liquidity sweeps. All right, so once it takes out sell side or buy side, you just want to go into the opposite direction, start looking for trades for the opposite direction. All right, I don't know if you trade SMC, if you're watching this and you trade SMC. If you don't, you could just use this as confluence to your strategy. What if you're using support and resistance? What if you're using indicators? You know what I'm saying? What if you're using trend lines? What if you're using patterns? All right, you could just always, like, this is like you having a second head, or it's two of you or something. You know what I'm saying? You just add in more confluences, right? So now you're making your trade a bit more like, I would say the probability of winning a bit more higher. All right, if that makes any sense. Hopefully that does. All right, so if you're new to the channel or you made it this far, make sure to join the free signals group if you're looking for those signals or just looking for somewhere to chill and relax. It is a Telegram group. All right, it is free to join. You're always welcome there. shoot me a message, anything you want. All right, we could have some discussion privately as well. So yeah, I think that's gonna be it for the analysis for gold next week or the upcoming weeks. So I said before, make sure to mark these up on your charts. Make sure to subscribe, leave a like, comment below which other chart you want me to deeply analyze, just like how I did gold right here. All right, and I'll see you guys in the next video. Thank you for watching.